Welcome to the webinar, How to Identify High-Value Growth Opportunities in Emerging Markets. My name is Kristen Marshall, Associate Research Director here at Lux, and I will be moderating today's session. Presenting today is my colleague Tiffany Hua, Analyst here at Lux. Throughout the webinar, you can type any questions you have in the questions box on your screen. Time permitting, we will answer all the questions that we can. If your question does not get answered, please do not hesitate to email it to questions@luxresearchinc.com and we will respond. If at any point you experience technical difficulties, such as a frozen screen, simply refresh your browser and check that your internet connection is strong. Now, let's jump into the presentation. Take it away, Tiff.
Thanks, Kristen, and welcome everyone. As mentioned, today we'll be speaking about how to identify high-value growth opportunities in emerging markets. So the goal of the talk is to really move beyond the question of market sizes and technologies and instead ask whether a market creates a credible opportunity for a company to compete and actually win. So to start, I want to use an example of a changing market that we carry around in our pockets every single day. And that would be, of course, the smartphone. Of course, it's very personal when we upgrade our phones and deciding on different features and technologies that we'd like to incorporate. And there's a lesson here on the materials that are constantly changing, the technologies that are constantly changing as we upgrade when it comes with the glass, the display, coatings, sensors, electronics. They're all clear areas that have winners and then also more visible losers. And one of the very clear winners of the smartphone is Corning's Gorilla Glass. In fact, Corning has been pretty revolutionary in terms of the first smartphone or touchscreen smartphone with the iPhone. But back in the day, Corning has a long history in glass, from light bulbs in the 1800s to automotive glass, consumer products like Pyrex in the 1900s, and of course the infamous iPhone, from the early 2000s. And so Corning's glass had a great fit for smartphones, where it was scratch resistant, it had the transparency needed, and it could survive daily use. And so, if you have an iPhone or if you're Team Samsung, you most likely have Gorilla Glass in your phone. But there's also an emerging competitor to silicate glass or Gorilla Glass called sapphire glass. And it's being positioned as an alternative actually to Gorilla Glass. So what smart sapphire glass is a very high hardness, very strong optical clarity glass that's already used in, let's say, luxury smartwatches and jewelry. And so it could be a next generation alternative to what we already have in terms of Gorilla Glass. And so, the issues that we have with scratches on our phones, that could very well be solved here. And we are also seeing a lot of people be intrigued by sapphire glass. Here, we're seeing a lot of media traction, market traction here, and we even see in the third headline here, Apple actually investing in GT Advance to scale up sapphire glass in a $500 million deal. And so this deal is pretty transformational in terms of stocks for GT Advanced. It led to a doubling of its stocks, fueling another $500 million for its scale-up operation. And so sapphire glass was being positioned as a real value proposition. And so my question for the audience is, if you looked at sapphire glass and had the opportunity to be an investor, would you invest, your own $100? However, this is where it takes a turn. This actually happened in 2014, so about 12 years ago, where the iPhone 6 came out. And it was speculated that sapphire glass was going to be released here, but it ended up not being mentioned at all. We got a bigger screen and an improved processor, but no sapphire glass. And so all of that excitement actually didn't pan out, and it was actually quite a big loss for GT Advance, sapphire glass producer, investors, and then also Apple. And so what ended up happening? There were clearly issues with, first off, the technology, the integration of sapphire glass, and then the partnership. If we just focus on the technical and integration issues here, it was clear that sapphire glass had good optical clarity and hardness, but it wasn't scalable enough and had good properties for, let's say, cracking and impact toughness. As you can see, it's cracking during production here. And to translate a small size of, let's say, for smartphones into a large screen for a small glass for watches to a large screen like smartphones has been a really large gap for commercialization. And so this is where, for GT Advanced, it was clear that the development of the technology wasn't developed enough. And even all of that funding didn't translate over. And so GT Advanced ended up filing for bankruptcy. And my question, earlier was if you invested that $100, you would have lost it. And at that time in 2014, this was a very exciting opportunity. We were on the next generations of iPhones. This was a field that was almost exponential when it came to electronic smartphone sales. But this was a clear area where it was a very attractive opportunity, but it didn't translate well when it actually came to commercialization. And so really the question here to come away with is how do we separate market hype from a credible opportunity? And how do we avoid these risks earlier, let's say when we assess opportunities like sapphire glass in a hyped up environment with a lot of media traction? So that's what I'm going to take you through today. I'm going to show you a framework or a methodology to assess the fit between a technology like sapphire glass and then a market. For example, in this case, smartphone glass or smartphone protection. We're going to use a couple of other examples. We're going to take you through the methodology in action and target advanced coatings for a couple of areas in renewable energy and electrification, and then also another approach for robotics in a different light. And then lastly, we'll look at how to use this framework when preparing for future markets, and then we'll end with key takeaways. So in the first section, let's go over this methodology that I'm talking about here. So we go back to our example of sapphire glass. There are 3 questions that we could have asked ourselves when thinking about that investment. And those 3 things that that could have been asked is the strategic need, market momentum, and commercial risk. And so we actually made this methodology with 3 questions, 3 areas in mind, and 7 criterias. Within strategic need, we break this down into application criticality. So trying to assess the importance of a solution to the need's viability, safety, or compliance. And then also differentiation potential, or the ability to create spec-relevant advantages or move beyond cost and more towards utility, functionality, and convenience. So at the end of the day, is the solution presenting enough value to justify an investment or R&D? The next area that we want to evaluate is market momentum. So this is composed of innovation activity, market momentum, and regulations and standards. For innovation activity, this is where we analyze research trends, patent trends, startup activity, and really understand where is the innovation landscape moving. Is it still in introductory stages or moving towards commercialization, or maybe it's still in early R&D? For market momentum, this is where we evaluate the broader market trajectory in terms of, let's say, broader EV, electrification, megatrends, but then also go down to that material or technology submarket, for example, sapphire glass. And so trying to understand the adoption trajectory. Regulations and standards, this is self-explanatory, but trying to understand industry standards, regulations, policy that could, let's say, change the adoption of technologies or materials in a supportive direction, or maybe in the other way, actually deter certain materials. And then lastly, the commercial risk, which we break it down into the competitive landscape and integration barriers. For competitive landscape, this is the evaluation of the maturity of the players in the landscape, concentration, and distribution. We ask ourselves, is it full of corporations, or is there room for startups? Or, is there a lot of research that might later on translate over? And then integration barriers is where we ask ourselves questions of, is the infrastructure ready for this technology? Are there a lot of qualifications or scale-up hurdles, like we saw, let's say, with sapphire glass, that can, let's say, be a large hurdle to success? So ultimately, the question here is, can companies realistically compete, integrate, and scale this technology or material in this market opportunity? So using these metrics, we've formed a rubric. This is a shorthand version of a much longer, more robust rubric that we have just for this presentation. But we go over essentially a score of 1 to 3 with a shorthand scorings, as you can see for an example, application criticality. If a score of 1 or weak, it's going to be non-essential to the application. Score of 2 provides a performance improvement, and score of 3 is a core solution that is necessary for that application. And so with these 3 metrics, let's actually use this methodology in action. For our example, we're going to show you, if you are, let's say, a coatings company and trying to explore markets, and then also, in a different approach. So there's 2 approaches that we'd like to propose here. A materials first approach. So let's say, again, if you're a coatings company, or let's say a company focused on composites, and you'd like to explore emerging markets to apply your coatings or composites, this is where we're going to assess emerging market needs and see where coatings and, let's say, composites can fit. We can also use this framework in the other way, exploring markets first, and then understanding material opportunities more broadly, so that we could assess the various needs, and then, let's say, create a new venture, or let's see, decide on an investment. And so there are different use cases for each approach, and it'll really depend on the needs of your team or organization. And so what I'll do here is go over a couple of examples from the materials first approach, and then also the markets first approach. Excuse me. For the materials first approach, this is where we're going to go over advanced coating opportunities in EVs. So we've done a deeper analysis here, exploring advanced coatings in EVs that go beyond protective coatings like paints, things like that, and more towards functional coatings that can really provide high value performance in EVs. So we narrowed that down to 5 here. For example, motor and mechanical efficiency via low friction coatings, electrical protection via dielectric or conductive coatings, thermal management and fire safety via thermal coatings, sensors and camera functionality via optical coatings, and then noise, vibration, and harshness via sound deadening coatings. And so we analyzed these opportunities, and they all seem like great opportunities, but what came out of the analysis was that there was a clear area where there provided more opportunities to stand out and actually to innovate, and that was thermal management and fire safety. That was the strongest opportunity, followed by electrical protection via electrical coatings, and then sensor and camera functionalities. And we'll go through an example of a weaker opportunity and why we see that using our framework, and then also a stronger opportunity that can show you like where the, let's say, metrics line up very nicely to create a strong opportunity. So first, we'll go over noise, vibration, and harshness, and we'll understand a little bit like why it's not a great opportunity, and then we'll go over thermal management and fire safety, and that's a little bit of a stronger opportunity for the industry. So for noise, vibration, and harshness, so these are coatings that are moving towards liquid applied polymer coatings that can essentially dampen vibrations, and they're more geared for lightweighting. If we talk about broader noise, vibration, and harshness, we are already used to, let's say, cellulosic mats or foams that you can insert, let's say, under the cabin or overhead, where this is where innovations are moving towards polymer coatings that are even more lightweight and easier to apply, and that can be applied to EVs, given that EVs have more of a noise issue, given that it's more quieter than the combustion engine. But this is where there's certain needs, but it's not an essential, let's say, technology or material for this application, given that there's already a host of alternative materials available. This is just let's say, a way to differentiate, especially in luxury markets, and then can be easier for manufacturing, for example. Other companies can just rely on existing sheets, foams, etc., that are still used today. When we talk about market momentum, this is where, in terms of innovation activity, we see incremental performance. They're very much focused on existing polymer coatings, polyurethane coatings, and then just maximizing that performance there. And when we look at market sizing or market growth, this is where we're seeing a smaller opportunity at less than $1 billion. When we talk about commercial risk, this is where there is an advantage here because the coatings, liquid applied polymer coatings, is pretty much a drop-in solution. And so the integration barriers are quite low, but this is where, given again that there are mature technology, the competitive landscape is going to be quite crowded. And so that's more of an issue of competition rather than integration. And so the bottom line here is that there are fewer opportunities in general for noise, vibration, and harshness sound deadening coatings. And so it's more relevant for coating companies that already have a relevant angle to enter here. And one way to differentiate is really going to be coupling with simulation softwares for vibration and acoustic simulations. It might not be a great opportunity if you're, let's say, a new entrant looking for an angle here. That'd be probably elsewhere. And let's visit a stronger opportunity here in thermal management and fire safety. So this is an area that we are seeing increasing needs for, given the various changes in EV vehicle design, changing battery chemistries, and new exploration of materials. And so this is where we're seeing, in terms of strategic need, it is a core solution in regards to application criticality. And this is where we're seeing, a lot of changes when it comes to the materials that are needed here. And so differentiation potential is also very high, as there are a lot of levers that can be played and also multifunctionalities that can also be imparted here. When it comes to market momentum, this is also an area that stands out. We are seeing, again, a lot of materials and design changes, and that also translates to the research and patents that we are seeing as well. And then another area that is very interesting here is regulations. We're actually seeing some regulations in China that are demanding more stringent design and testing of, let's say, the battery enclosures for thermal runaway events. And so that's going to impact the types of materials and designs used for EVs. And then lastly, for commercial risk, this is where we are seeing the competitive landscape become a little bit more crowded, but there's also room for startups. We see large corporations that already develop thermal management coatings enter, but then other companies that are developing, let's say, aerogel solutions or, let's say, novel ceramic solutions are also making their way in. The biggest challenge is going to be integration barriers, given that automotives is also already a high qualification market, there's going to be some work to really find the right solution that fits within, a automotive company's design, and then also keeping up with the changing designs that we see in EVs. That's going to be difficult to kind of tune. And so bottom line here is it's a strong opportunity, especially the ability to highly differentiate solutions and tune with the different types of multifunctionalities and designs that we're seeing. The issue is going to be how to best integrate it, as a lot of these design changes we see are going to happen in the next 5 to 10 years. And so one example that we wanted to use to illustrate this point is with a company called Zerkotech. So Zerkotech, they have developed a ceramic coating called Electrohold, and it is a multifunctional coating that provides fire resistance, heat dissipation, dielectric strength. But another thing that it is intended to do is actually enable the switching from heavy steel battery enclosures towards composites, plastic, or aluminum battery enclosures. And the reason why this is significant is because a lot of these heavy steel battery enclosures represent almost 10% of the weight of an EV. And so by saving, 5, 10% of that weight, you can drastically impact that fuel efficiency using this coating coupled with, let's say, a composite or plastic. And so there's potentially fuel efficiency, let's say, differentiation to be gained here. But again, as we mentioned, the biggest point that's going to be challenging is going to be integration, and even more so for a solution like this, just because it's pushing for a design change in the battery enclosures. Although it can be highly a point of differentiation for automakers, there's a challenge to kind of actually fit it into, let's say, the supply chain and an automaker's OEM. And so we reviewed the materials first approach. Aside from EVs, as you saw, there are a couple of other analyses that we've done for other fields. So we've looked at other emerging market opportunities for advanced coatings, including batteries and energy storage, as well as fuel cells and electrolyzers, and then also hydrogen and CO2 transport. And we've also evaluated, where we see a good opportunity or moderate, strong versus a weak. And so if you're interested here, let us know and we can share more with you. And let's move on to the market first approach. And so again, we're going to explore markets, whether existing or emerging, and then identify the unmet materials needs that are still present and potentially provide a good or bad opportunity. So in this example, we're going to focus on robotics, and we're going to look again at more general unmet material opportunities. And so here's where we've looked at 5 areas, including coatings that can address environmental protection or robustness. We can look at composites, which, for grippers, enable dexterity, versatility. We can look at energy efficiency for novel reinforcement materials. We can look at sensors to improve autonomy and dexterity, and then thermal interface materials that impact thermal management and reliability. So we evaluated this similar to the last example, and what we found are 2 areas that are positioned as strong opportunities: dexterity and versatility via functional composites, and autonomy and dexterity via sensors. And the reason why that we see this is because that's what opens up more of the frontier of robotics and industrial robotics, enabling, let's say, new use cases, improved performance. And so those are 2 areas that have stronger opportunities for growth and differentiation. So again, like last time, we'll go over a strong opportunity and a weaker opportunity. We'll start first with environmental robustness or protection via coatings, and then we'll look at sensors as a stronger opportunity. So we've already talked a little bit about coatings, but coatings for robotics is going to be a little bit different here. For robotics, there's a range of applications that it can be applied. It really depends on where you want to apply the robotics. If it's outdoor, subsea, in medical environment, clean room environment, where there's a lot of tuning that is necessary. And so there's a little bit of a dependency here, but in general, this is where coatings are going to be, let's say, epoxy-based, electroplating, thermal spray. A lot of the existing chemistries used and techniques used, and most of them are going to be performance improvements. Given that this is an area that already exists, there's a well-known let's say, library of materials and formulations that address some of these environmental conditions. And so when it comes to differentiation potential, given that we are moving towards more of like a cost-sensitive market here, this is where it's more moderate differentiation, although there's a little bit of room to play with in terms of performance metrics. When it comes to market momentum, we're also seeing more moderate signals here. For example, innovation activity, it's more about incremental formulation changes, incremental processing changes. And then in terms of regulation, this is also going to be more moderate. There are very clear regulations for certain environments, such as clean room environments that require, certain conditions and certain, let's say, contamination resistances, etc. And then for underwater environments, there's going to be, hydrophobic or IP7, and beyond types of protection. When it comes to commercial risk, this is where there are also positives and negatives. For advanced coatings or anti-corrosion coatings, again, very well or very mature area where integration is going to be quite easy in terms of the application. We already have services and coating application, like applicators that can be drop-in solutions. The challenge comes when it comes to competing against other corporations and SMEs, as this area is quite crowded. And so the bottom line is that this is a moderate and limited opportunities for new entrants, given that, again, we already have a, let's say, a crowded market for anti-corrosion coatings. We're now seeing them trickle into the robotics field, where now it's about tuning to specific environments. Let's say in industrial environments, harsh environments, clean room, subsea, where this is one area that you can still enter and stand out, but it'll be difficult. A stronger opportunity looks, let's look at a stronger opportunity in sensors. So in sensors, this is where advanced sensors go beyond just commodity sensors and, force sensors, CO2 sensors. These sensors integrate more with software or more with other sensors that, can create fused sensors, for example. And so they're moving towards more smarter, autonomous, software and integrated systems. And when it comes to strategic need, this is a pretty core solution for robotics, given that it's the functionality of the robotics, the eyes of the robot, the feelers of the robot, and so quite a core element there. When it comes to differentiation, this is where we're seeing a lot of differentiation via not only the performance, but then also the software. There's a lot more room to work with software with sensors, and so that's where we're seeing more system, more packaged solutions, not just, let's say, sensor components. And this is also reflected in innovation activity. So expanding upon the sensor applications, but then also the software, the computing of how these sensors interact with the environment. In terms of market growth, we do see a larger market size at more than $1 billion, and then moderate regulatory signals there. In commercial risk, we also see moderate signals. Given that sensors have already been around and moving towards being commoditized, we do see a lot of players in the competitive landscape, but we also see startups also showing up with, newer integrations, better sensors, more integration with software, and more system level packages. And then integration is where it's going to be a moderate barrier, given the challenges of integrating into a robotic supply chain, value chain, but then also software can allow you to differentiate, but can also be what holds you back in terms of integrating into a broader system. And so this is a strong but selective opportunity. The strongest opportunities are going to be more from system level improvements in terms of reliability, responsiveness, rather than just incremental, like, force sensors or increased sensitivity. And increased sensitivity is great, but, trying to package it more with like how it plays out within an environment, I think makes it stand out even more. And to illustrate this point, here's a company that is using that systems level approach. So Animal is targeting hazardous environments, specifically inspections in hazardous environments. So they're incorporating thermal, gas, acoustic sensors, and essentially enabling scheduled or ad hoc inspections across, let's say, like a facility or an oil and gas site. And it can collect this information, measurements, autonomously move around the site, and then also convey that information back to the team. And so it's coupled with fixed sensors and cameras that interact with each other and perform together. And so these package systems is something that we are going to see be applied to certain scenarios for building up to larger, let's say, robotic infrastructure. So this is just one example of what we see moving forward. And so we've looked at the methodology in action. How do we also prepare for future markets? Instead of, let's say, current markets, we talked about, robotics, EVs, we talked about past markets and smartphones. What about, let's say, the futuristic markets that we're seeing tomorrow? So to kind of illustrate this, again, we have the past, present, and future. If we just look at the future, there are certain technologies like solid-state batteries, green hydrogen, let's see, in-space manufacturing, low Earth orbit infrastructure. How do we get ready for these a little bit further looking opportunities? And they're quite big in terms of market sizing. I asked AI, what do you think is the market opportunity here? And there's a lot of, very large numbers. But, I also want to propose that even though there's a projection for a lot of these big numbers, don't get caught in the trap of, oh, that's a really big opportunity, because these large market sizes, they don't automatically translate over and they don't automatically create meaningful market opportunities. And so the real question that we want to ask is, what is the unmet need? What is the strategic need that we can meet? And to just go back to sapphire glass, this is where we need to ask ourselves about those questions earlier, about strategic need, about commercial risk, about market momentum, where we can get a clear picture to, let's say, avoid a big market size that didn't actually pan out. And so we actually did this analysis here and tried to look at sapphire glass and how our framework could have, made us invest differently. If we look at strategic need, it was moderate in terms of the signals here. In terms of the criticality, it's a performance improvement given the existence of silicate glass. Gorilla Glass already existed. When it comes to differentiation potential, again, we already know that it has really good scratch resistance, but there are also cons in terms of impact and toughness, and it provided moderate differentiation. Really just scratch resistance was the big potential or differentiation there. When it came to market momentum, innovation activity at that time in 2014, it was steady. There was actually innovation on, improving the scale at that time, but nowhere near enough to majorly impact the scale for Apple's operation. So it was steady. Demand growth, as we saw, we also saw that it was less than $1 billion. And then when it came to commercial risk, this is where there was already existing competition with other glass makers, as we saw, and where really, the downfall was really integration barriers, given, again, the difficulties in production and then expanding to the smartphone size that we need, and then also trying to tune that impact toughness, that, drop test that really deterred it from being a good fit for smartphone protection. And so if we use this analysis, we'd likely not invest and maybe second guess that $100 that we invested. So instead, this is where, looking at the crux of what's important in terms of investments and, evaluating market opportunities, this is where we propose the strategic need, market momentum, and commercial risk. So strategic need should tell us if the market truly needs a solution. The market momentum should show us where the external conditions are moving in the right direction. And then commercial risk should tell us if a company or a solution can truly compete, integrate, and scale, let's say, in this environment. And one thing that I want to note is that this is also a static analysis where timing is still very important. And so even though we analyzed it across those three dimensions, another consideration is also analyzing it in terms of timing. If you, let's say, target a solution too early, it can also tie up resources before the ecosystem is ready. So trying to understand, if integration barriers, this is too high, for example, and then also if you integrate too late, it can also lead to a lot of competition with entrenched or incumbent players, where it's more about how do you differentiate. And so the checklist to really identify the proper timing is three things. Monitor those weak signals to understand when do we move from too early and identify the sweet spot before we move into too late. Second is, avoiding the hype where it's clear that something is too early. The scale up barriers are, a little bit too high. The ecosystem is still immature, where you have to kind of avoid the market traction, the hype that, kind of urges you to invest. And then thirdly is constantly reassessing, because something that is too early, you have to constantly assess to understand when you reach that perfect sweet spot of timing. And so those are the three that checklists that I would urge. We do have research that does look at weak signals and strategies when it comes to yearly planning that you can check out also on our website or inquire with us, that can also be coupled with this presentation. And so just, on the topic of constantly reevaluating your markets, today, it's not just about Corning's Gorilla Glass anymore, and about scratch resistance or drop resistance. We're seeing a market evolve for flexible glass, right? And so markets are constantly evolving in terms of needs. Here we're seeing flexibility, ultra thin properties as being a major want for the market. And so we're going to see moving form factors where, the question is if Corning can stand up to this, as we see Samsung come out with, let's say, its ultra, flexible glass with foldable phones. And so, yes, in terms of key takeaways.
Are you looking to manage multiple?
In terms of key takeaways, first off, again, attractive markets are not always actionable markets, as we saw in the beginning, trying to avoid hype and try to understand true growth with strategic need and market momentum. The second, again, is trying to find that intersection of need, momentum, and manageable risk. just because something, let's say a solution, has really good media traction, as we saw, it might not have the right fit of integration, innovation, or let's say regulatory pull that can pull it to success. And then number 3 is long-term winners redeploying core capabilities. We saw that with Corning and how it adopted to the smartphones. We can see it also with how other companies reposition their coding portfolio to address new needs. So there's a constant need for reevaluation, as we saw with our slide on timing. And so that ends our presentation here. I'll leave it to Kristen to take a look at any questions we have from the audience.
Awesome. Yes, so thanks so much, Tiff. We will now be taking questions that you may have on the presentation, which you can type into the questions box. If we do not get to your question during the session, someone from Lux will be in touch after the webinar. All right, let's take a look. Okay, so Tiff, this first question, so the framework you presented looks at metrics across strategic need, market momentum, and commercial risk. But in practice, not every metric may carry the same importance in every situation. So can companies prioritize certain metrics over others based on their needs? How would that work?
Yeah, it will really depend on, let's say if you're an R&D in the R&D department or investment department, where certain metrics you might want to pay attention to a little bit more closely. For example, the differentiation potential is where you can evaluate where a solution can stand out. And so as an R&D department, trying to explore more opportunities for materials and processing developments there, that might be an important metric to kind of evaluate or weigh a little bit more heavily. While let's say for investment, this is where integration might be an interesting metric to watch, just because integration barrier is low doesn't mean that it's a bad score. It means that there's something needed to push this forward, right? And so investment isn't necessarily bad, but you have to also dig deeper to unlock if there's, let's say, the innovation that is missing along with that integration. But let's say if an integration barrier is already very strong, it might have already been a mature market. So those are a couple of examples. It will also really depend exactly where you want to spend your time, like in terms of regulation. Is there regulatory markets that are moving forward? You could also see where there's opportunities there.
Yeah, that kind of brings up a good follow-up question, which is, once the evaluation is complete, how do teams interpret that final score? How do you know when an overall score is good enough to pursue or move forward on?
Yeah, I think I mentioned a little bit of that just now. Yeah, like trying to understand the importance of your goal, and also assessing individual metrics. At the end of the day, all of these scoring and metrics, the exercise should be used at a higher level to evaluate certain markets and then across markets as well, right? And so not only just one individual market, but moving towards a direction for your organization. And so this should be a way to shortlist, not quite be the absolute way. And so I think that, again, keeping that in mind as a tool, rather than let's say, oh, this is a really good opportunity, we need to execute that.
Yeah.
So
yeah. So it sounds like rather than like a go, no go threshold, it's a tool that's flexible, that gives companies a way to compare different opportunities, or maybe even like signal where diligence or more diligence is needed for a particular opportunity.
Exactly.
All right. So the last question, or we only have time for one more. So, is it possible for these metrics to change? And if so, are there additional considerations that indicate when a metric could be potentially changed, whether for a new market or for a new technology?
Yeah, absolutely. This is an interesting question. So a couple of things like regulation can change over time. Every year, if you're doing that evaluation, it could improve, or let's say a policy could be repealed and then that score lower. So absolutely, it can change. There are a couple of things where, let's say, if market traction increases for a certain area, and I'll use an example for ADAS, so autonomous driving systems. One of the metrics, one of the applications is sensors and optical coatings. If we see regulations require certain systems testing or conditions for these sensors, there might be a mandate or a safety requirement for these coatings or systems, sensors or cleaning systems, for example, that changes that. And so definitely certain conditions, regulations, or integration barriers, et cetera, can lead to other metrics being changed. That's just a very quick example.
Great. And obviously, if you have more questions, please do reach out, and we'd be happy to connect you with Tiff, and she could walk you through one-on-one on the methodology. But with that, thank you so much, Tiff. That concludes our webinar for today. The slide presentation and recording from this webinar will be sent to all attendees via email. After leaving the webinar, you'll be prompted to complete a survey on the presentation, and we'd be appreciative for any feedback that you have to inform and improve future webinars. And then, take a moment and check out our upcoming webinars on our website. But thank you so much, and have a great day.